Today on Forbes, why Ramaco says it can beat its government-backed rival for rare earth supremacy. Ramaco Resources broke ground last month on a new coal mine in Sheridan, Wyoming, the first one in the state in 50 years. By early July, Ramaco had excavated 100 feet down, exposing a 20-foot wide coal seam, and was holding an official ribbon cutting with Energy Secretary Chris Wright and retired West Virginia Senator Joe Manchin in attendance. But despite their shared enthusiasm for fossil fuels, it wasn't old-fashioned electricity-generating coal that attracted those big shots to the Brook Mine. Ramaco Chairman and CEO Randy Atkins expects the 2.5 million tons of coal he plans to extract over the next 12 months will contain within it some of the world's most sought-after rare earth elements and other critical minerals. Specifically, dysprosium, neodymium, scandium, and gallium. Vital stuff for making powerful magnets, semiconductors, night vision goggles, hypersonic missiles, and much more. Atkins, a 69-year-old lawyer and Ramaco founder, whose resume includes stints in private equity, investment banking, and real estate development, declares, quote, "Critical minerals and rare earths are to this century what oil was to the 20th century." Publicly traded Ramaco is up 80% year-to-date to a $1 billion market cap on $11 million in earnings and $670 million in sales. The company says that once its pilot processing plant is completed, as early as late 2026, it will be able to meet more than 10% of America's 10,000 tons per year of total rare earths demand, nearly all of which is currently sourced from China. The Trump administration is leaning heavily into domestic production of rare earths. Earlier this month, the Pentagon announced that it would invest $400 million into Ramaco's rival, publicly traded MP Materials, which operates America's only currently producing rare earths mine at Mountain Pass, California. The federal cash injection will go in part to build a new magnet factory 10 times the size of the one MP recently built in Fort Worth, Texas. MP shares jumped 45% on the news, giving it a $7.3 billion market cap. But Atkins says his Brook Mine resource is far superior to MP's. Mountain Pass yields mostly the so-called lighter rare earths, especially cerium, used in water treatment. MP also has to contend with radioactivity in its ore, which is not present at Brook. Ramaco, Atkins says, will be the sole domestic supplier of the heavier, more valuable rare earths. MP, for its part, points out that although so-called heavies make up only 2% of its Mountain Pass output, that does add up to several hundred tons of heavy oxides per year. The geology of Wyoming's Powder River Basin is rich with fossil fuels. The nation's biggest coal mines, some extracting 100 million tons a year, are there. Oil production in the region is growing quickly, but no one knew there were rare earths there until a few years ago. Atkins explains, quote, "It's not that these elements are rare, they're just not often found in concentrations that are economic to develop." At Brook, with the help of engineering work by Fluor, they've found rare earth concentrations as high as 10,000 parts per million, which so far appears to be unique among coal accumulations anywhere on Earth. Atkins attributes this to ancient volcanic activity that pushed up mineral-laden magma. Most of the 2.5 million tons of excavation Ramaco expects to do a year aims to get regular old coal out of the way to reach about 500,000 tons a year with high rare earth concentrations. Atkins says, quote, "We're ultimately trying to be surgical. We won't have gigantic pits." In all of this, a big question remains. How much can it get paid for rare earths once it starts mining and refining them? There's no free market. China's state-controlled rare earth monopolies manipulate supplies and prices to the rest of the world, a key impetus for the Pentagon's move to invest in MP. Atkins says he appreciates government support, but that Ramaco can finance its own expansion. For full coverage, check out Christopher Hellman's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.